Hey folks, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you can find across the markets today. What I do is two things. The first thing I do is I teach a course, and in the course, traders learn two specific gap trading strategies. The first one is the morning gap trades. That's when stocks are gapping higher or lower at the open. It creates an opportunity for traders. The opportunity is for traders that can identify a specific price level where stocks will first be drawn to and then second have a price reaction from in the other direction. In my course, traders learn exactly how to calculate the precise levels where stocks will be drawn to and have that price reaction from in the other direction. That is the most important component of the morning gap trading strategy, but yet it's only a tip of the iceberg. In the course, you learn everything you need to know in order to trade the gaps successfully. The second thing I do is I give traders an opportunity to get my gap trades each and every day at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market even opens for trading. Here's the email that went out this morning to traders. The morning gap trades on the board this morning, there were four. We had FTI, CLR, BBL, and TS. Now the market's been relatively quiet, and therefore we're not getting a lot of volatility, but we still got one of these trades to come into its level, and it was CLR. I say gap lower, support levels are $30.52 and $28.59. Stop and profit target is about 20 to 35 cents. This is a minimum profit target. Now, in a few weeks, earnings season will get started up again, and therefore, the morning gap trading opportunities will come fast and furious once again. But if we can get one or two trades each and every day leading up to that point, that's fantastic. These are great scalp trades. These are great day trades. Let's go back and take a look at the chart of Continental Resources in detail. Here we're on a 10-minute chart of Continental Resources, and you can see here where the stock closed at 32.24. This was yesterday's close. This morning, the stock was opening up at 31.27. Not a tremendous gap lower. However, what we did was identify a level down at $30.52, which if the stock were to trade to that level, that's the only level we would have been interested to take a trade. These are high probability trades. If a stock does not come into the level that we calculate, we don't want the trade. We're only interested in taking trades where we have the highest probability of success right in front of us. As you can see, the stock came into that level about a half hour into the trading day, making a low of $30.41, and just minutes later, the stock was already at a high of $30.76, qualifying for the minimum target on the scalp trade. Now you can also see what happened. The importance of this price level at $30.52 plays into the mix. Because it's such an important level, and that's what I teach in my course, traders learn why these levels are so important. The stocks tend to hang around these levels, and you can see what happened. Although it did trade slightly below the level, it stayed within the stop loss limitation and now is trading up around $31, making a high already. Let me move this over. It did make a high of $31.08 for more than a 50 cents bounce off that level. So traders that were interested in turning this into a day trade were rewarded, and traders that were interested in taking the profit at a scalp trade level were also rewarded. This could very well be the low of the day, and the stock could certainly trade higher. It's beginning to consolidate in a bullish formation, which definitely promotes higher prices as long as it remains in and around this price range. It just needs some more time to bake in the oven. We generally get at minimum of one or two opportunities on stocks that hit their price levels, giving us a high probability trade opportunity. During earnings season, we get more each and every day that runs for about a 6-week period of time. Traders that want to learn how to trade the gap successfully can learn everything they need to know in the course at LazyGapTrader.com. This is a strategy that you can learn and utilize for the rest of your trading career. I'm David Frost, LazyGapTrader.com. Thanks for tuning in, traders.